what I honestly expect is by year end, the US economy is borderline recession. Early 2023, we're in a recession. And then you see the Fed potentially, especially if inflation starts to come in back to 4 to 5%, then you could see the Federal Reserve actually start to loosen again. One of the things I've kind of said is that you have the Federal Reserve dealing with a scale, right? So on one side, you have inflation. On the other side is their other mandate, which is unemployment. Right now, unemployment is super low, inflation is super high.
Hello and welcome to Smart Tech Ideas. In today's video, Chief Market Analyst at InTheMoneyStocks.com Gareth Soloway updates about the Bitcoin and crypto markets, the ongoing events, and the big flush to $20,000. He also speaks about the potential Bitcoin bounce back, why he thinks that Bitcoin's price is going to jump over $25,000 in the coming few weeks, and why the current crisis is the beginning of the end for the financial system. Gareth also decodes his famous prediction regarding Bitcoin's crash and why some metrics suggest that it is not over yet. Make sure to stick around till the end of this video where Gareth Soloway reveals why a recession will begin in early 2023. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
I think let's start with cryptocurrency. I think it's kind of an interesting period in crypto because we've just seen that big flush that took us below 20,000 to about 17.5, and then very quickly the next day we recovered back above the 2017 highs. So I think for me, that's the line in the sand right now, is that you can go below a previous pivot high, a major level like that, but the recovery is important. If we didn't recover and we were still below that level, it would signal near-term weakness. Right now, I actually think that we're in a position to maybe see a bounce over the next week or two, potentially back to 25,000, maybe as high as 28,000+, before, unfortunately, we probably see a little bit more downside. Right now, there's kind of this time factor involved where we got below that previous 2017 high, we recovered with a reversal candle, which is a technical bullish signal, and now we've just been going sideways. It's been very, very eerily quiet in the crypto markets, but we've started to see some altcoins starting to pick up. For instance, we've seen Polygon have a monster move. In fact, let me bring up that chart here on Polygon. Okay. Let's take a look. So you can see this move on Polygon. It's just been ripping up to the upside. It got as low as about 30 cents. So it's up about 100%. And then if you look at other names, like even Solana has been showing us some relative strength, breaking up here off of these recent lows. So even though Bitcoin hasn't started to really rip to the upside, some of these more beaten down altcoins are, and I look at them as kind of a little bit of a leading indicator. I think if you go back to Solana, for instance, when Bitcoin was topping, this was still holding up relatively well before it really started to fall dramatically. So it makes sense to me that these could be showing a little bit of a risk on kind of take on the crypto markets, and that could be telling us that Bitcoin could likely get a bounce in the next week.
In case you were unaware, Bitcoin is currently on sale. According to the opinions of experts in a large financial institution, Bitcoin is currently undervalued at $20,000. The coin was recently appraised by J.P. Morgan Chase at $38,000, which is almost 90% more than its current worth. Some experts believe that Bitcoin might be valued up to $100,000 in 2 years, and its present fair market value is between $40,000 and $50,000. They anticipate that the price of Bitcoin will rise to approximately $38,000 by the end of this year and $50,000 by the end of 2023.
In addition, I think it's important to recognize that the NASDAQ 100 is having another monster day. We know that, as much as we don't in the crypto markets like to say that crypto and stocks are connected, they are, frankly.
They're very correlated.
Yeah, it's definitely a risk-on trade, whether it's technology stocks or crypto. And therefore, when you're starting to see the NASDAQ rip up, it's telling me that the risk-on environment is starting to percolate again, and that's a positive for Bitcoin. So I would be kind of surprised if we don't have a move up on Bitcoin in the next week and a half, back to at least 25,000.
So far this year, the crypto and stock markets have been volatile. In recent months, the prices of Bitcoin, Ethereum, and other cryptocurrencies have fallen in tandem with the stock market as investors cope with growing inflation, Russia's assault on Ukraine, rising interest rates, and recession fears.
So interestingly enough, if you go back to last October and November, everyone was always asking me, well, what's the catalyst for this kind of flush out? What's going to happen here? And one of the things that I was comparing the crypto markets to was the dot-com bubble, right? So this is taking us back to the late 90s, early 2000s, where you had a very similar scenario with dot-com companies where there were so many of them. And I mean, I kid you not, some of these dot-coms were like run out of their parents' basement. They basically did nothing, but they got ridiculous valuations. You would see a stock that was a few pennies a share go to 10 cents, go to 50 cents, go to $3. I mean, it would become a mega-sized company that almost did nothing and really had no business being a legitimate stock. And we saw a lot of this in crypto, right? You've seen so many coins. I mean, now what do we have? 20,000 coins out there, and it's just not a healthy environment. The bottom line is there's not space. I mean, think about overpopulation or the Darwinian impact. And I love referring it to Darwin and kind of survival of the fittest in terms of genetics, because it really does play a role here where there's just so much and you need to see that washout occur. So the fact that we're seeing Terra Luna collapse, we saw the UST, we saw the Celsius. I mean, this is exactly what actually should be happening, and it's not over yet.
The most recent crypto market fall occurred after May's inflation data revealed persistently high consumer prices, and the Federal Reserve raised its benchmark interest rate by 75 basis points, the highest increase in over 3 decades. The crypto market lost almost $2 trillion, while the S&P slipped into a bear market. Experts say that now could be a good time to get into the crypto market while prices are low, but only after you've figured out your risk tolerance and prioritized other parts of your finances, like saving for an emergency, paying off high-interest debt, and investing in a traditional retirement account like a 401k.
And this is not good for Americans. This is not good for the world. This is kind of the beginning of the end, in my opinion, of the dollar, of the U.S. financial system, and it's going to take time. But my guess is in 10 years, we're talking about a new reserve currency of the world, whether it's the digital yuan or something else. So it's kind of the demise. It's the beginning of the end of the financial system in the U.S. the way it is now.
If there is one thing you should know about investing in cryptocurrencies, it is that they are incredibly volatile and unpredictable. Minute-by-minute price fluctuations are caused by speculation, hype, and broader economic conditions. Potential investors who wish to invest during the current market downturn should understand that price changes are normal and be prepared for more price declines. If you cannot tolerate extreme market fluctuations, you should not invest in cryptocurrencies.
So I think in regards to the Federal Reserve, you're right in that there's likely another 50 basis point hike coming in the next meeting, maybe one after that. But I've long said that I do think that will end very, very quickly because, the midterms, obviously, generally you'll see the Federal Reserve historically not do a lot of crazy monetary policy just before elections, whether it's a Republican or Democrat, because they don't want a market crash or anything to be looked at and said, oh, well, you guys are the reason this happened, right? So they kind of like to remove themselves out of the equation. Now, having said that, I think the tightening has been on purpose to bring down inflation and mainly oil, right? So tightening of interest rates slows the economy. That's what it does because it sucks money out of the system. So less money to spend, less money to go around. It slows the system down.
So, do you think that Gareth's recession warning is legit or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.